story. And we'll talk to Albert Louie about this now, who's the founder and managing director at Louie Associates, which is a credit crisis and risk consultancy firm. And he joins us here in our Hong Kong studios this morning. Nice to talk to you, Albert. Good morning to you.
Morning.
Let's talk about what happened at the MPC in a very controlled press conference, which always takes place on that Sunday at the end of the National People's Congress. We have Premier Wen saying, I think the yuan is not undervalued. What do you think he actually meant by this statement?
Well, it depends on what angle you look at it. The yuan is always a so-called problem for international trade, especially being pressured by say the U.S. For appreciating. But I think the way you look at it is really a complicated issue, and that is to say, if you look at the Chinese economy, which compose about 60%, if a bit more, export-led, and a lot of that is really JV, and or Chinese companies working with foreign companies. If the yuan or the RMB appreciates, can you expect that the cost of goods will be more expensive for export, and of course vice versa.
Do you think a weak Chinese currency or a pegged Chinese currency, because it really hasn't moved since July 2008, is actually good for China's economy right now, especially as we have pockets of overheating and people questioning asset bubbles developing on the mainland? I
think that would be very difficult to be pegged because China's financial system is different. It's not as, the way I look at it is not as transparent, and a lot more financial regulations, policies or what have you are not there yet. So its financial infrastructure is not ready. So it's very difficult to be pegged, and then if you do, then you can expect a lot more interventions by the government.
So you don't really see the Chinese authorities moving on the RMB this year then, if you said it doesn't have the financial infrastructure to, I guess, to develop a flexible currency?
Well, I just don't see it because, again, I mean, you look at the currency being traded. I mean, the demand for Chinese goods internationally, for the lower end perhaps a bit more, but the high end is just not there yet. And
what about the Chinese currency at this point, the Chinese economy? Let's move on from the Chinese currency. Sure. Premier Wen, was trying to find resolutions to bridge the gap between the poor and the rich in China. Obviously, that gap is one of his focuses. But what about how the Chinese economy is stabilizing at this point? They're aiming for 8% GDP growth, which they do every year, really. But how do you see things playing out on the mainland for this year, 2010?
Well, then again, you look at the structure of the economy and disparity between the regional rich and poor provinces. The central government does know what it wants. I believe, it realizes that there are problems. Now, however, governing such a big country, and of course the government is still trying to learn how to govern, then the policies being implemented by regional provinces or what have you gets lost somewhat. So it's been difficult. But back to whether it's 8 or 10 or what have you, depends again what angle you look at it and what statistics you really search for, you see.
You don't believe all the statistics that come off the mainland, is that what you're saying?
Well, I'm not saying that. I'm just saying that some of the statistics there is just worth another look.
Okay. Interesting, Albert. Thank you for that. Albert Louie of Louie Associates, which is a risk crisis consultancy firm.